What is up, everybody? I see chat is already active. Amazing. Maxi King. Are you still in Thailand, dog? Don't forget to sleep, dude. I know it's a cool finish, but don't forget to sleep unless you're up in the morning. Tom is here. Yeah, super cool. Super cool watching that, hey? Look at that. Look at that finish. How about that, y'all? Hey, this is one of those times, right? Very happy to have proven, I guess, initially overcautious on the day. But yeah, we will see. We will see how this unfolds. Very interesting move here toward the end of the day. Very interesting move. I mean, really, I guess from 10:30, because I would say, let me see if I can zoom in on this a bit. I would say there were a couple times where I thought, we were just going to reverse, right? So basically the morning, like, traded this morning formation. This happened like exactly as I had thought it would, right? So let me just get this down a little bit here. Yeah. So this move here, right? This was very textbook. Oh, we're going to finish below max pain, right? This here, right? So we trade up a little bit in pre-market. Everybody's all excited. Oh, we're getting all bullish off the open. Oh my gosh, we went back up slightly below yesterday's high. Up, down, double top, right? Sell some calls in here. Actually, this was this point here. I think the first right here, this top was the most. If you were selling like weeklies, if you were selling weeklies for this week or for 25s or for 17, April 17 or April 25, the best time, like the most expensive that those calls were like 30s, right? The most expensive that 30s were right here. So they got up into the 40s, I think. And then they just never, even with this price movement, IV just never got back. Just never got back to this. So, okay, so what happened, right? What happened after that? Like, okay, double top, down. We kind of had, right, VWAP. I don't have this here on my chart here, but, right, so, yeah, we danced off of VWAP for a bit. And then we went all the way down, and it really looked like, yeah, down here, really looked like, all right, there we go, like selling off, put in some shorting, okay, and then we just kind of hung out down here. This was exactly about 2 standard deviations below the VWAP line, and then this little bounce, but then SPY started reversing, and all of a sudden we just diagonaled right out of this, which was very interesting because this looked like, when I see something like this, right? We talk about V-shape, these V-shape patterns. V-shape patterns make me look at where you see like, okay, you get a red line diagonal down and then this green basically exactly as high up. That looks like entering a short position to reposition the price and then immediately exiting it. So we also had one over here too, right? Here. Something like this. So, but then we moved up here. Okay, we hung out around VWAP. This was like right around the VWAP line. And then volume just started, like, actually we were pretty low volume in here. So this looked like, okay, sideways. And then later in the day, we're going to get some charm out of the money. Call charm is probably going to push us down. And then we'll just kind of, all right, maybe not down to the 23s for max pain, but maybe we could get down, 24 or something or other, right? Something like that. But no, then right around here, this looked like maybe part of a VWAP order or something. Came in, big cluster of volume right here. When did this start? 12:25 basically, right? Volume picked up, big volume. We didn't even end up with big volume on the day. What did we end up with on the day here? 10 million. So lower volume than yesterday. Very interesting. It's still elevated. It's still above average, but volume coming down, but price is just cruising. And then we got up there, and then this, let's bump over for a little bit to unusual whales here. Yeah, so if we go, let's see, do a little refresh. We do our composite strikes here. All right, so we definitely got a lot more. Ooh, this is, whoa, this got spread out a bunch, huh? This got spread out a lot. So, ooh, look at that. Bunch of stuff, bunch of calls got opened up, 50, 55, 60, 65 in this area. There's 40, there's 35. Here's 30, here's 25. Yeah, 26 got huge. I mean, I noticed this earlier in the day. So, man, what is going on there? All this widened up a lot. But this, right? So, yeah, earlier in the day, basically, yeah, when I was recording the video, actually, right? 26, basically the same size for this week. 26 as a gamma position, as a market maker gamma exposure position, basically equivalent to 25. So I think once those, what I think this might have been, right, is this might have had something to do with ETFs. Like, so, you know, Richard talked about this all week. I had my eye on it, just like watching this occur, right? Kind of, you know, talking to him about it, watching his videos on this too. And then, you know, watching him update what's going on his sheet, which is a great resource for tracking the ETFs. And, you know, to see all this ETF activity come out of nowhere, right? To see the shares outstanding in, this week, the shares outstanding, get this, shares outstanding in XRT actually quadrupled. So what happens, right? And Richard talked about this too, if you had a chance to look at his video. Right, what happens when that occurs? Well, okay, you create the shares, right? You create the units of the ETF. But you don't actually have to right away. You don't have to put. It doesn't have to be perfectly balanced. So you can, if you don't have a certain security is not, like, it's hard to get or something like that. You don't have to immediately put the share of that security into the unit of the ETF. You can use cash instead. So you can do cash in lieu of security. So you can say, oh yeah, here's a share of XRT, but it's missing a bunch of the underlying securities in it. But you can present that, you know, if you need to meet an obligation or something like that, you can present that. Maybe there's a way that then, you know, something goes on there as far as needing to meet an obligation, or some older settlement requirement necessitates that, you know, the authorized participant go out at some point, right, beyond the creation date, but go out and actually buy those shares. We did see a lot of recovery today in SPY, so that may have had something to do. That may have influenced the degree to which we actually traded up. Whether these creation orders ended up, especially on XRT, caused an authorized participant or something somewhere. You know, this would have been, I think, who runs this? Spider. I think XRT is Spider, so that's State Street. So, you know, State Street, go out, grab this stuff. BlackRock was doing stuff. Vanguard was doing stuff with their ETFs. So to go out and actually buy shares here, something like that. And so just got stuck over that 26 position, and there we go. And we just never looked back. We stayed up in that upper VWAP channel into the second half of the day. And now with this, man, somebody also pumped this. That's what was so interesting too here, right? Let's bump back over to Trader View here. Somebody pumped this into the close so that the 26s couldn't be worthless. Because that was the other thing I was looking at. I was like, man, like that 26, look, how many calls did we have there today? What was our OI? I want to say even this week it was over 10,000 contracts. Okay, as of open today, it was 14,000. It was 14,000. And the 26 fives almost went in the money too, which would have been another 4,000. The volume on the 26s today, look at this. Volume on the 26s, over 25,000 contracts. Over 25,000 contracts traded today. And yeah, all 14,000 of those. So if you had a 26, you had a long 26, that's got value on it, right? That's that's got a 40-cent print on it with that closing price. So very interesting stuff. We might get a little T+1 that has to do with that on Monday. Very interesting. Very interesting. Yeah. All right, let's check out the chat here, see how you guys are doing. Oh, cheers, Cannon Fodder. Thanks for taking the shots for us. Is implied by your name, I guess. Not medical advice is in the house. Cheers, my friend. Cheers. A little tea. A little plum tea. And spice tea warms my bones. What's up, SGN? Cheers, man. Thank you. Gamma Chad had to roll those 25s. Yeah. Yeah, hey, I guess we do have some of these we have some of these rare days where it occurs, right? 30 is a lot. The 30s are a lot harder to see, right? Those don't go in the money as often. That's a more highly defended position, or it has been, I suppose, over the past few years. 25s are a little looser, but you might be okay. You might be okay with the 25s if you rolled them for a good price with IV. But if not, right? Here's one thing. Here's like a rule that I do. It's like if I'm going to get assigned, number one, I make sure I pick a strike price with whatever shares I'm dealing with. I always pick a strike price so that no matter what happens, I profit. So if they expire worthless, I profit. If they expire in the money, I also I get assigned, I profit there too. So I just always make sure I do that. And then it's like, okay, I just accept. All right, if I'm getting assigned, I'm getting assigned. And then I'm just going to pivot with these either into cash secured puts, or if I see a price that I like and I just want to snatch that because I think we're going up afterwards, then I do that. But I always just accept the assignment. I haven't tried too much rolling. I mean, I haven't done that. But a lot of people do have success with what is it? Out and up. So, yeah, you can just keep doing that until the price goes down, right? Just keep like, oh, I have to buy this, so let me buy a more expensive. Let me sell a more expensive one. I can use the cash from that to cover the other one, and just keep going, right, until it all ends up out of the money, right? I mean, it has to work eventually. That's martingaling, right? That's essentially martingaling. It'll work until, you might have to do it 10 times in a row. But, if Cohen's gonna do another offering at some point, and when he does, if it doesn't work out until then, like you'll at least have that to wait for, right? But cheers. Yeah. So I think maybe a little T+1. We'll have to see what things are looking like pre-market. We'll have to see what the broader market's doing. That was it. We just kind of recovered super well today. All the inflation numbers were like really good. Let's see. Like everybody was all like, "Oh, inflation, it's going to be so bad," or something. I mean, maybe it does. Like the tariffs just went into effect. Like I don't know. But everybody was like, it's gonna be great immediately, it's gonna be terrible, and then it was fine. So yeah, I guess the Michigan stuff where everything was fine had something, whatever the real reason is, the market recovered today. Today was a big negative gamma expiry, so if we bump back over to unusual whales, I haven't, I guess, made a formal study of this, but if we go over to SPY, if we've had a bunch of volatility, oh, whoa, these are really getting spread out here, huh? I mean, still super negative here, but how much do we have today? Yeah, so today was a decent sized negative gamma expiry. Not crazy, but if we see this, it's like, a move down kind of into this, but on the day maybe we move up. So like the last like non OPEX like big one we had of these was 331. So that was the JPM collar trade roll. And so we were super bearish pre-market. We were bearish open into that. But then early in the morning, they rolled the trade. And then after they rolled the trade, we just, right. So all that negative GEX got taken off the board. All those puts that were anchoring, I guess, that kind of bearish hedging just got taken off the board. And then we just sailed after that. So maybe we see something like that occur. Maybe that was what was going on today with the broader market. Something like that. Interesting to take note of. Let's see who's up next here. Oh, hey, it's me. What's up? It's up to you, sir. Exciting. Hey, nice, dude. I also made some money today. Very good. Although I took some early profit in the day because I thought we were going down. I was like, we're gonna go down. So I moved, like I have a bunch of like miscellaneous shares, right? Not in like denominations of 100. And I was like, I'll sell some of these, get a little extra cash. That's like kind of fun. I'll say like, ooh, can I swing this on a day-to-day basis? Because like I don't know if I can, but if you put a very small amount of skin in the game, you'll actually like pay attention to it. But if you don't actually like try to trade it, then you won't. So, well, that was cool. Took some profits on some leaps just in just in case, right? Just in case we trade down early next week. Indeed. Left side, strong side. Mr. Beakers, are you from the pickle jar? The only people I've ever heard refer to GME as Jimmy or pickle jar people, which is fine. That's fun. I had a lot of fun with the lingo that y'all had over there. If you are indeed from the pickle jar. Hien Huynh. Are you Vietnamese, my friend? I went out with a half Vietnamese girl one time, and her last name was Huynh. Oh, what's up? Indeed. Wait, what? You sold 26s for that price. Yeah, so there you go. You made a penny, I think, on those. Depends how many you sold. Yeah, you're good though. Right? Yeah, you're good. Prince. They might adjust the print, but I think it's gonna be 2640. Oh man, thank you so much. I really appreciate that. Really. I just try to look, like I said, I'm like my new people, like there may be some new people in here, new people to the channel, new people to X, right? I'm not an expert in this. This isn't my background. I just try to understand this, right? I was, fascinated by this, getting wrapped up in GameStop several years ago, right? Got thrown for a loop with everything that happened, and then just, this year with Rory Kitty coming back, I was like, you know what? I think I have something to contribute. I can just, I remember being on Superstonk, and I remember thinking like, man, there are all kinds of people who are like hyping up dates and just being like, oh, let's go calls for this day. That was the thing that got me. It was like the July 17th echo, right? So we had whatever that thing was, whether that was like Roaring Kitty, the share echo. So let me point this out. I pointed this out to some of the, old timers on the channel before. Let's bump out to the daily charts. This, right? Okay, so this thing, right? I remember, like, because I started writing. This was really it. Like, I started writing. I think I published my first thing on Superstonk on the 26th of June. So right in here, and like we came off of this, and I was like, okay, like yeah, we will, but maybe we could go up here. Here's what it says in the options data. Here's how this could look. This is what we want to be looking for. But like some people were like, man, like buy calls for the 17th, like have it be on that day. And I just remember being like, you know what? Like, I'm not about to go out and like give people specific trade advice, but like let me just try and be somebody more balanced after having been someone who really didn't trade options correctly for a very long time, and just present an alternative and try to understand this better myself. So if I can help people understand this landscape better, or even just like give people some different considerations, right? Because like we're the way we learn, the way we like think about the world is we think about the world in structures that we map out using tools, right? So, when you master, I don't know, drums, like suddenly the world becomes, in many ways, a place where you can play the drums. Like you ever see the people in like stomp with like the trash cans and stuff like that. So, like, yeah, we experiment with different tools. We experiment with different instruments, and for a reason, right? Different derivatives, different trades and stuff. Like whatever they're called instruments. They're different instruments for trading price action. And if all you know is shares and long calls, then that's going to be the primary implement by which you approach trying to make money off of the stock market. But if you know that there are other tools, if you know that there are other instruments out there that have better probabilities, and that other people, they're not necessarily what jump out to you at first, because they're kind of counterintuitive the way that they're organized. But when you realize that's available to you, it's like, wait, there's all this easy money that is just like, and if I do this, then the designated options market maker has to take my trade, even though I'm crazy advantaged. And the only reason that they do is because most people just refuse to take trades that are in their favor. That's why you can do that, as long as it stays profitable for the options market maker, which it does. Then they'll keep doing it. So I'll actually be happy the day that it doesn't work anymore. That'd be great. But I don't think that day is coming soon. A lot. That's a good question. How many total here? Can we add this up? We can get a ballpark from probably anywhere from like 35 to 40%. So probably like 60-ish thousand, I think. Maybe closer to 30%. 30 to 30, 33, like a third. Which is pretty good, which is a lot higher than what usually happens. Hey, Kurt's here. What's up? Short Fridays. Yeah, that's very interesting, right? We might be seeing some of this price action might have to do with kind of algorithmic association with Bitcoin. How that's looking. Mm. A little bit, maybe. Yeah, because we kind of. When did we dip? We dipped back here. See, we're outpacing Bitcoin, I think, because Bitcoin started getting dropped right around the time that we did. So I don't know. Some traders might have started shorting Bitcoin, but we already started climbing out of this earlier. So Bitcoin's still looking not as bearish as it has been on the daily. It's looking okay on the daily. Let's check the weekly. Weekly. I think it's got some down to go. I think Bitcoin. If I'm just going off of PMO stuff, like we're probably gonna go to 58,000, probably. Which, I mean, great buying price, but based on this, right? If we just go on this, maybe not, maybe not. So here, back in March of last year, right? We went into this kind of bearish move for a little while, right? Kind of bearish, ended up being a consolidatory while these moving averages kind of caught up. And then we did negotiate the 50 here in August and September. So that was also, in terms of our momentum, not looking splendid. Started to even out. Did we start to go down? We didn't go down quite with the 55. We evened out. Have we started to decline? It does look like not exactly. Actually, we're still technically flat here on the weekly. So yeah, we could get this rally here, but basically we kind of need Bitcoin to start moving up over the next couple weeks. I think we've got to consolidate here on top of the 50-week moving average. So we've got to consolidate in this kind of 75,000 to 85,000 range. If we can do that for a month, then this should flatten out, and then we can, I think, start moving back to the upside. I will say that the Bitcoin chart does look better than SPY. It looks better than SPY. So if we bump over to SPY, US equities not looking superb, to say the least. This is a crazy weekly candle. But okay, all right. Looks very much like COVID. Not exactly, but that's kind of the steepest shot down we've had since COVID. Wild. Yeah, I was thinking we looked more like the 22 bear market there for a while, but then we're kind of combining some elements of both. So not sure. We haven't tested, right, in both these occasions. We tested that 200 week. So we haven't done that yet. That looks like that will happen. Like we're nowhere near on spot. We're nowhere near consolidation. Nowhere near. Like we need to consolidate for months. Maybe we get that now because of the 90-day tariff pause. Maybe we do consolidate, but yeah. So I mean that is very interesting. Bitcoin does look better than U.S. equities right now. So be that as it may. What's up, Frank? Coffee, Donuts, and Homer. What's up, dude? It's a good name. I recently, Coffee, Donuts, and Homer. I recently watched a cool movie with it was Rafe Fiennes. I think it was called The Return. So it was about the last book of the Odyssey. It was like the whole movie was just the last book of the Odyssey. It was good. Pretty faithful recreation of it too. Low budget Italian film, but it was really good. If you like Homer, you'll like The Return. I think it came out like last year. I have no intention to. Oh my God, Heather, Jenna. Oh my God. Oh my God. Yeah, I can't. What's up, man? Yeah, Dingus Bingus. Yeah, man, I wanted to be cautious. I've seen that a lot. One of the few times I think I've seen a Friday pump was ETF related? It was the December rebalancing, I want to say. So after December, triple witching was when we had a day like this where it just like pumped. Still didn't send the call wall in the money. So that was interesting. I will notice right where we stopped today. Where we stopped was basically right about where we got shorted, where the ARB trader shorted us. I think I mentioned this somewhere else. Right, a little higher actually. So yeah, really interesting close there. Really interesting. So that's basically like the midline of this price here. It's right about where we started, where the ARB traders started doing their thing with us here, right? It's the midline of our price action the last time we had this big like ETF, or I should say FTD event, right? So back here in the middle of our, so I think actually somebody asked me a question. I think who was it? Cosmo? It might have been, yeah, Cosmotropic, I think asked this. That I had mentioned in the past, and I had done this on a live stream, right? that I mentioned that they were kind of like 5-week intervals. So what looks to be the case is that we have in our, like, we have basically about a 10-week, I think I talked about this last one of my videos, maybe early this week I talked about this, right? So we have volatility and liquidity phases. And so, right, they're about 10 weeks each, give or take 2. So they're about 10 weeks each. Here's one, right? This is a volatility phase, liquidity phase, liquidity phase, right? So it's getting pumped up because FTDs are being covered and maybe it's after swaps have been rolled. Now, like in the past, it occurred, but the down legs were bigger than the up legs. Now the up legs are bigger than the down legs, right? So this has to do with the equity raises now. This wasn't occurring back here. So we were moving up and then we were going at least as far down, if not more, right? Especially through 2022 and 2023 in the bear market. So equities were selling off. ETFs were probably selling off, rebalancing less and less of GME. So there were outflows of GME from ETFs. It was being shorted probably again. So we'd move down and then we'd recover, but not as much, and then move down. And right, so that's what that looked like basically through all of 2022 and all of 2023. And the first part of 2024, right? So move up and then down, 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 down. So bigger leg down, small leg up, bigger leg down, but then whoop. Here we go. So, but within this, if we zoom in, so this is weekly. If we zoom in, it's more visible. Not even so much on the daily, a little bit more. Let's go 4 hour. So yeah, definitely more visible on the 4 hour. So you'll see we have these kind of like artificial kind of breaks and stuff in the middle of it. So if you zoom out on the daily or the weekly, right, you can see very clearly this is like an up leg. This is about a 10-week volatility phase up leg. But in the middle of it, right, we got this where it's a bigger spike and then maybe a bigger move down here. So in the middle, right, this was on our up leg. So we went super high, didn't come down as low, had some stuff go on around earnings, and then we chugged back up before we got our double top and our transition. But then here, okay, down leg, right? So we got all these FTDs essentially here. So in order to stop this, in order to get this transition, in order to get it down for these swaps down here in time, right? So these are our swaps. Entered into this position here and then shot back up, right? So a little ETF something or other going on here. And then these FTDs got closed, but then this got shorted back down and entered into more FTDs. Maybe then these were covered right here around earnings, but maybe covered up right after this swap roll. This would have been after the 13th. So this would have been, when whoever was done, see, these swaps are not necessarily held by the same party. So when whoever was done shorting this into the 13th was done shorting this into the 13th. So these were the Archegos / then inherited by Credit Suisse swaps. But the 28th and the 31st, these are not the same party. So whoever had this swap, like when they were done rolling this or closing it, they were like, all right, we're done. Time to start closing out our short position. Then they did. Then maybe some FTDs came in and started pumping this thing. And so somebody had to walk it down. And so, all right, the arb traders helped a bit with the convertible bond offering. These swaps got rolled. And then we started to, be done beginning on right after the 31st. We started to move back to the upside, a little bit down back, but then now we're cruising back to the upside here. So yeah, each one is kind of subdivided into 5 weeks. So we can expect maybe about 5 weeks into one of these phases, there'll be a bit of a peak and then maybe something of an intra-trend cool off before we might continue back in that direction. So do we have that here? I think in our last spring one, I think Roaring Kitty, like he may have timed his thing to coincide. Whoops. He may have timed it to coincide with one of those cool-offs. Let's see. How many weeks into this? 4. Yeah. Yeah, he did. Kind of 4 weeks into one of these. 1, 2, 3, 4. Yeah. So 4 weeks in. 4, 5. And then, yeah. Interesting. Something to look more into. But certainly with these past two, legs that we got, they were subdivided. They had events right in the middle of them. So very interesting there. But yeah, they decided they were going to move it up. Always good to be cautious, though. I also listen. I also wanted to put that out there because I saw something super exciting, and like I don't want people like if I post something and I get excited, like I don't want people to think like, oh man, he's pumping the stock, like he's telling me to go buy long calls. Like I can say that so many times, but somebody's still going to get the wrong idea if I say like, all right, hey, like I think this is important because this hasn't happened since the last time since Rory and Katie returned. But that doesn't mean I'm saying we're going to $200 now. Go mortgage your house for the third time and go buy calls. I just try to be super, super aware of that. So, yeah. What's up to Swag? Cheers to you, my friend. Hope you had a good work day. Hope you're ready to enjoy this weekend. It's gonna be a good weekend. I'm going on a retreat with my church. That should be good. Restful. I have to get up early though. But it's okay. Sacrifice a little something, a little pain, little discomfort, right? That's how you discover value. A little investment. It has. It has. Yeah, right. When it's all bunched up like that, it's a little bit more difficult, right? Well, but that's it, right? That's why traders really like volatility because you want a nice big range to move up and down, right? Whenever we're in that 25 to 30 range, like it's way more tradable. We volumes up, we're trading in that range. The 25 to 30 and the 30 to 35, like we really move, but it's something like below 25, like the 20 to 25, we just get so cramped. Options don't move a lot. Like we kind of get stuck in the middle of that between like 22 and 23. All the times we've been down there, that's been the case. I don't know how they work. You guys probably know more about the YouTube algos than I do, but if you sincerely like the content, go for it. Love to hear from you guys. All strikes. So the GEX data on the unusual whales, it'll show you it by strike across all expiries, or it'll show you a specific expiry, and it'll also show you according to expiry. So you can see all three. So if we look at that, right? So this is GEX according to expiry. This is GEX according to a specific expiry. So this was today's expiry on SPY. This is all the gamma just for today. Right, this is across all expiries, or this is by expiry. So this will show you how much total there is across each expiry. And then this one will show you by strike. So all of the gamma at a specific strike across all of the current expiries concentrated here. Yeah. So that's a good question. I mean, I'm cautious of that. I was cautious of that into today, certainly because of a number of things, right? I maybe there was something else. Maybe I did read it correctly, and there was something else, or maybe I was just off, right? Not sure. I was extra cautious, basically, because I had seen, okay, Max Payne. How does that work, right? Like I know what I've seen in the past as far as what our options market maker is incentivized with. That's generally steers me clear. I mean, it's not 100%, but it's a very high probability thing to bet on. Okay, a weekly expiry. It's probably going to finish under the call wall, even if we go above it midweek, something like that. It'll finish below that mark end of the week. Especially those $5 increments. So 25, 30, 35, like especially 30. Like 30, you'd be like, oh man, we're at 32, and then it slips under. And then, oh, we're back at 31, and then it slips under. And then, we did that in November, December. We did that so many times. We did that like 4 or 5 times before we actually went above $30. And it didn't happen on a Friday. That's it. It tends not to happen on a Friday, at least so far. At least so far this year. So that was an interesting surprise. What I would say is, if so, let's bump over to back to what chart is this? This one. So yeah, so this is what I was looking at pre-market here. Right, the last time that we had 9.7 million shares of XRT outstanding. So actually, the last time it was a green day, so that could have just been something that I missed, right? It was actually a green day. It was a green Friday when we had this many shares of XRT happen. And then the 3 days following, we had a slight pullback, right? So not crazy. So if we bump over to TradingView again, let's go down to 1 day. Here. So, right, we just moved up, right? So we were in one of these kind of cauldrons. We did move up, but then Monday, down. So April 29, down. Tuesday, April 30th, down. Wednesday, May 1st, down. But then Thursday, Friday, whoa, uh-oh. Right, big move. We had just come off that bottom, so we had spent 3 days coming off that low there. Right, I think. Was this lower? No, the low was actually a little bit farther before that. So the 24th, we were actually, we were just trading in the 10s and the 11s. Did we get up to 12? Not quite to 12. We got a high at 12 on that Friday, the 26th. And then we moved down in here. So I'm cautious of this. Okay, if this was up because of the XRT creation and acquisition of units of GameStop, right? If we had a bunch of XRT creation. In fact, let's go look at Richard's chart to see what it looked like leading up to that. So Richard shares this chart on all of his videos, so he's got it linked there. So I believe he's welcome, if you watch his videos, to follow along with what he's looking at. Yeah, so starting on the 22nd, started to chug up here. So came down a bit. It was increasing bit by bit. Oops. But we came down a little bit. Right. Came down a little bit, back to 8.5. So some redemption here, redemption, little bit of creation, right? Redemption on Monday, redemption over here, but creation now back on XRT, creation on the 3rd, redemption, a little creation on IWM over here. But then spike again on the 14th. So, okay. That's certainly, when we see elevated numbers like this, that means that something is going on, right? They're needing to get units of the ETF in order to meet settlement or FTD requirements or something like that. So let's hop back over to the chart. So yeah, I'll be wary of this, maybe of a slight pullback. What are we looking at here? It's a different. It's hard to make one-to-one comparisons and say, oh, we're going to do this again, because it's not the same context. It's never exactly the same context. The company's fundamentals are different. The context is slightly different. Our relationship to swaps is different. Where it's occurring in the year is different. Our relationship to OPEX is different. Maybe because of this resistance spot here, maybe we kind of come back down a little bit, right? I'm wary of this. Maybe we open up for 27 and then, quote unquote, fill this gap and then move down a little bit before then moving up again. I could see that happening. I don't know necessarily. What I do think is going to happen is, I think over the next, we're in one of these volatility phases. We will see pullbacks. But I think by and large, over the next 6 to 8 weeks, we're going to continue to see things move up. And in part, I think that as a result of, what we've been looking at in terms of swaps. So Metro Ballin was really good about pointing out the connection between swaps in the fall. So actually, let's look at the fall swaps first. So let's look at the Chewy swaps back in November. Back in November here. Had a bunch on the 31st, 28th, 17th. These are a little outdated. I don't have Metro Ballin works on this on a regular basis, but these are a little bit outdated. But for the fall, for November, they should still be up to date. So, for example, right, these are all Chewy swaps. So we had some, 30th of November here. Bunch on the 31st of October into November 1st. Right, 4th, quite a lot. Lot on the 4th, as you can see. A lot, like a lot. 8th, this was another big day. A lot of swaps. A lot. Big ones too. Right, a lot on the 8th. These were key days. A lot on the 8th. These were a lot. Here's the 10th. 15th, right? So look at the 18th. What happened on the 18th? I felt like we exploded on the 18th. Did we explode on the 18th? We didn't. We actually moved down a little bit. 8th, we were up. 4th was a bottom. Then from the 4th to the 8th, we moved up. 18th, it was a little bit down, but then we moved up afterward. Actually, kind of like what we're doing now. Here. Let's get back to these. $25th, we had some more. Yeah, that was another big day actually. Right, 25th. Yeah, 25th in here. 26th, 27th, then 29th is when we started to move down. So interesting. So I mean, part of the proposition here, what Metro Ball thought, 26th, also a bunch, so many. Look at all these guys. 29th, 30th. Here we started moving down. Blue might have some GameStop swaps there, but the 9th, big ones again. Very interesting, right? So part of what Metro Ballin was basically pointing out here is, this idea here that, okay, right, so Richard points to these bottoms and talks about GME swaps lining up with these bottoms, but there may be a correlation. And this might have been what Roaring Kitty was suggesting last year, that there's a correlation between positive movement in GameStop and Chewy swap expiry. So I don't know if that correlation is going to hold up. It seems like that may have had something to do with our price action in the fall. Something, right? I mean, we have Cohen and especially Cohen seems to be hinting at the fact that we've got something like that coming up over the next couple months, right? The March to kind of June run, the Rainbow Road, built a fish. Yeah, that bit there seems to suggest that we're gonna, insiders are buying, and then after insiders buy, we start moving up. So, are we going to get that again? Well, interestingly, we do. Basically, next week we have another big pile of Chewy swaps, guys. So right here, so Metro Ballin sent, this is more updated. Metro Ballin sent this to me a little while ago. Can I make this, open this in a new tab or something? There's that. Oh, that's better. So here's our expiration dates. Had some on the 2nd, interestingly. These were swaps from, well, this was a modification. But these were new swaps that were entered into the 2nd of April last year. If they're short swaps, they're not going to be looking good. This was entered into, was this modified? Okay, so then modified March of this year. Interesting. Very high notional value. Interesting. And then if we walk these forward, we've got May stuff. So then we've got stuff that was open. So these are new swaps. So newt means a new swap. Modi is a modification. So it's changed. The terms were changed. Newt means a new swap was opened. So we had a bunch of new swaps that were opened basically in between the peaks of the sneeze 2.0 last year. They're not super big here. These ones are not big, but then they were modified, so then they got big. Like, what? This one. So one of these guys here, which was open for a small notional value, was modified after that massive move up on the 20th. So on September OPEX, on the 23rd, it was modified. And notice we don't have FTD data for this date on GameStop or Chewy. 26 million notional value. Is that billions of dollars? Don't know. Millions of dollars? Don't know what notional value exactly means, but that's a bigger number than these ones. So it's bigger. Something, right? I mean, we had huge volatility on that day. And look at when this was originally entered into. 4th. This was January 4th, 2021. So this was back around when GameStop would have been the equivalent of like $5 or something. Maybe less. What was GameStop's price back then? Jan 4. We got to go back to the sneeze. Just before. GameStop's price on the 4th. If that was a short swap, man, I hate to break it to you, but we closed at $4.31 that day. That was GameStop now. I mean, I know these are Chewy swaps, but see, this is the problem. I don't know exactly how these are marked. But interesting, if we got swapped with Chewy, like back then, this would have been Jan of 21. Fourth here. So Chewy's down a lot since then, but GameStop's up a lot. Don't know what that means. But I will point out that, let's get back to this, where did this go? I will point out that we have a lot of expiration dates here, all clustered basically next week. A lot of people have been throwing the 16th out there as an interesting date. Don't know where they're getting it, but we do have a lot of this all kind of together. The big one, though, is, of course, next Thursday. One of these that was expiring on the 16th got modified to this notional value. So is that 100 million? Is that 100 billion of notional value? Don't know. But this does seem to line up with maybe these, if 420 matters, right? I know besides it being a meme date, does 420 matter in terms of what Roaring Kitty's suggesting here? Are these Chewy swaps, just like he suggested back in the fall? Could this have something to do with what we're anticipating here? We also have a bunch, I think, that are coming due on the 5th. So do we enter into a period of, this kind of bookended period here between the 16th, say, and the 5th of May, when we have another big batch of Chewy swaps coming due? Is that another range where we're just GameStop's blowing up because of this? I don't know. Don't know exactly how these swaps work, but if we start moving, right, and this is an opportunity for us empirically, right? So we can put out a hypothesis, and we can say, right, when we see GameStop swap expiries, big GameStop swap expiries, this seems to be what we figured out in March. Very strong case made that, all right, when we've got big GameStop swap expiries with high notional values on specific dates, the price is going to get shorted into those dates. Okay, so that was true for the 11th, that was true for the 28th, and that was true for the 31st. And we saw that coming, right? Okay. April's a bit freer. We don't have a ton of GameStop notional value expiring in April, but now we have Chewy swaps. Okay, back in November and December, we had a bunch of notional value of Chewy expiring, but not a bunch of notional value of GameStop. And so we started moving up. Okay, so if that relationship persists and we see that this time, does then that become something of a tell for us going forward? That's a good question, right? That's a good question, but we'll find out. We'll find out. I wish I could say for certain, but something certainly to keep my eye on. Do I think RC will do an offering after he bought? Oh, he'll do an offering. I don't know when he's going to do an offering, but he'll do. I mean, if we go nuts, right? Like if you see the price explode to like $40 or something, like assume he'll do an offering. That's what I'm assuming, essentially. Hey, Short Fridays is back. Thank you very much. Yes, super chats are active. YouTube finally gave me the green light there, so I turned them on last week, I think. Right, we started getting more people. It says we have 900. We have 112 people on YouTube. Oh, amazing! 112 simultaneous viewers over on YouTube. What is up? And 825 people apparently dropping in over on X. So very cool. Helps these pop up a little more clearly. David's here. What's up, David? Cheers, my friend. Yeah, probably not like immediately after. Probably not immediately after he bought in. Probably give it a little time, but he'll do it off of volatility, is what I imagine. Maybe he'll do it into the 5th. If we really blow up into the 5th, maybe he'll do it into the 5th, and then again in June. I think we have some GME swaps in early July, late June, early July. So maybe he does something like that. Very cool. Not a pickler anymore. So you're in the pickle jar for a bit. Back to the light. No longer dipped in vinegar. Glad that you're with us. Oh my God, Heather Jana. It's high. I would say it's typical. It's typical of our high volatility periods. So this was typical of November. We were looking like this in November again. So we had this level of options activity in November, and definitely in like May and June. May and June were crazy. So we're not up to that level. But yeah, I mean, we part of the difference is, right, we're looking at 10 times the total amount of premium spent versus our lows. Did we get any more? Ooh, question today. Did we get any more? Oh, wait a second. No, come back. Oh, I just saw it. Where'd it go? This guy, did he get out? Did he get out? This guy probably closed his trade. This was this super bullish dude with the risk reversal with the 3,994. Oh, I want to visualize it here. How much money did this guy make? He probably closed these. You guys can see this, right? Yeah, he probably closed these. Didn't want them assigned. Did he profit? Stock was at 26.35. Man, it needed to be. It needed to be. He did close them. I think he closed them for a profit. Remember? Let's see. Can we visualize the profit loss? Yeah. This is what's cool here. I think this guy won this trade, which is super cool. Oh, like barely though? Well, what was the entry cost? Well, this is giving his entry cost is this. He entered like down here. So he probably made like a pretty decent amount. I'd have to go back and look at my. How big was this? Let's look at the 26s. We should be able to see. This is today. This was back, I think here. I think it was here. Average fill was 38. Average fill here, 41. Where did he sell them at? Yeah, so he did actually. I mean, cool for that guy. He probably made like 25% off this. That was a super bullish trade. I was like, whoa. Yeah, he did. He did. Hey, good for this dude. Right, put was worthless. No, but he sold another. Wait, but this is different. No, this is different because he didn't. He bought a 22 put. Oh, I guess this was a similar. Very interesting. This is different because no, this is different. It looks like he re-upped the 26 call and maybe the 21 put before. What was the expiry? Okay, so he closed the 26 call for profit. Yeah, he made like 20% on this on the 26 call. This was worthless, so he closed this out for a cent rather than holding it to expiry. But then these he opened. So this looks like he sold for next week. He sold probably a 28.5. And picked up some cash. Okay. I mean, yeah, that makes sense. I mean, I sold 30s today, so I didn't get that much though. How did he get that? Oh, because he sold a lot. Because he sold 394. He sold 400,000 shares worth. That's why I don't have that many. And he's not hedged though, right? Nope. Hopefully he's hedged with shares. And then he also picked up a 22 put. He bought 22 puts. So he might also be betting on a reversal to the downside early next week. This is big. These are big trades. I mean, for me, if he's got millions of dollars, I don't know. Obviously, if he's got 400,000 shares sitting in his account, he's got like 12 million at least in GME shares. This was very interesting. Was we saw a lot of 500 blocks. This was cool, right? A lot of 500 blocks of 20s. This was interesting. Look at this. I don't know why you think that's right. Oh, that's 400. No, we don't want that. We want this 500 blocks of 20s. Why do you think these are related? I guess so. A bunch of these came in. So what were these? These were like poor man's cover calls or something? Yeah. So this is like, yeah. Very interesting. A lot of these 500 blocks came in, but apparently they're like multi-leg trades here. So these are hedged with in the money calls, but a lot on this strike too. For June 20s. Yeah. Oh man, more of this too. So these trades, these multi-leg ones with the 27s, with the short 27s, because they're probably short at the mid. Probably playing the by June we're going to come back down into the middle of this range or something. So profit off of the sold call, and then probably end up with some profit because 20 is like below our cash floor, so that'll be profitable. It's not going to expire worthless. Very interesting. Have to digest some more of these trades over the weekend, but yeah, this is normal for this level here. I mean, the orders yesterday that looked really close to like what Roaring Kitty would buy, but they were just a little bit different. I'm not gonna go and say it was him yet. Somebody did take an interest in that lower IV, but I'm not gonna say it's him yet because he doesn't like to do the same thing twice. And he dropped some hints, but he doesn't like to do the same thing twice. So we'll see. Oh, cheers. Ride it out. Ride it out. If you get assigned, you get assigned. If you don't, you don't, right? I mean, that's why part of the goal there is you pick it so you win either way, right? Win either way. There'll be, other opportunities down the road, right? Abundance mentality, something like that. Oh no, you made profit. Risk off. What do you mean by risk off? Maybe. No, my prediction today was wrong. My prediction today was wrong. My prediction earlier this week, I guess, wasn't wrong, but my prediction today was wrong. It was wrong. I'm happy for it to be wrong. That's fine. That's fine. I'd rather like. I'd rather err on the. I'd rather be. I'd rather err on the side of caution and not be overly enthusiastic. Take a little bit of profit while I have it. Put stack up a little cash in case we do get a pullback. I would do what I did today. I would do again, and it might end up working out next week, right? So like I did, I sold 30s. Those are probably going to be fine next week. Those are going to probably expire out of the money, and I'll have premium from that. Exited a few leaps, took profits on those, like some miscellaneous shares. So have a little bit of cash, right? It's not like I don't like being like, okay, like you're all cash in and you wait, like fine. But I like to have that. Like if I don't have cash, I feel like that's kind of an avenue that's closed off to me. So I do like to have a little bit there, especially if I think we've been cruising for a number of days. It's like, I want a little bit just in case we get a pullback so I can, set something up. So I don't mind that. I don't mind being wrong today. How much do I think retail with large sell positions selling CCs affects dealers' decisions? It's typically the lower the IV correlates to more retail covered call selling. That's a good question. I don't know how. I would say no. Well, okay, IV correlates. Well, I have seen times where so I don't know if it's necessarily lower IV or if it's because of it's a liquidity phase and we're going down. I mean, our IV does tend to go down in the liquidity phase, but I don't know that that's because retail is selling covered calls. It could be. I have seen times where people get over enthusiastic, where I see like buyers maybe are a little bit aggressive with their covered call selling like stuff that's, I'm sure this week we saw some positions open up with, people selling 22s or 24s or something like that. It was like, all right, you're asking for it there, folks. I do see some of those get a little bit aggressive, and that generally tells me like, oh, maybe we have a chance for a little hitchback here. But ideally, I guess it shouldn't matter to the market maker because they're supposed to be perfectly hedged gamma and delta on both sides of the trade. So they're not supposed to bias, like they can't, right? They just offer quotes and they're supposed to take whatever trade comes their way. And it's not supposed to matter to them because they profit off of volatility and time, typically, and I guess fees. Maybe they get a cut of brokerage fees or something. I'm not sure about that, but they're supposed to be completely neutral to the trade. So they're not profiting. They're supposed to profit, I guess, either way, but might not necessarily work out like that, right? Retail especially tends to go long, so it might surprise you. Like I did this post on cash secured puts earlier this week on my X page, and people are like, "Wow, I didn't know you could do." Like people texted me. I had some friends who like saw my people who saw my Twitter page, and they're like, "Tell me about this cash secured put." And it's like, yeah, short options is not intuitive. Like you don't automatically like think that that's something that would really work for you because it doesn't look appealing you can look at a weekly call and go like, oh, I can conceptualize this, number one. But number two, the price makes sense to me, and it makes sense to me how much money I could win this week by playing this bet. But like, you don't necessarily know to be like, oh, let me look 6 to 9 weeks out on on the bid side of a put to figure out how those are priced, and then I have cash and I don't buy something and it's collateral. Like, you wouldn't automatically assume that that's the game, Um, so there's still like I guarantee you, there's a shocking vast number of people who do not trade short options at all, despite the fact that they're retail. And part of it too is like, it's not very appealing if you have a small account, because you're not. If you have a larger account, it's like okay, my account's not huge, but it's large enough where I can, use the money that I make from mostly just selling. This is why I call short options my bread and butter, because I literally that's what I use to pay the bills. Um, I always make sure I have that, and if I want to like do something a little bit more aggressive, I'm using a very small portion of my portfolio. Where it's like, if it doesn't go, if it doesn't go right for me, I'm at a couple $100. But if I do get it right, it's like, oh, all right, I just won like $800 or $1,200 or something like that, and that's kind of like a one-off, and that's kind of icing on the cake. But I get excited about 2% in a week, but a lot of people don't get excited about 2% in a week. But if you do it every week, but eventually, if you've got a $5,000 account or you've got a $10,000 account, 2% in a week is not exciting. Yeah, I did. I definitely did. This is what I'm saying. I was wrong. I definitely thought it would. I still think it's going to pull back in the beginning of next week too, but I'll be happy to be wrong. I'll keep saying it, right? I'll keep being cautious. If I get a sign, I get a sign. But I will say I will look at the different data sources. I will look at technicals. I will look at my options. I will go off of the historical stuff, right? Like I said, I think today was like my 200th consecutive article tracking GameStop price movement through the options market. If I keep seeing stuff that lines up with my data, like, I'll say what I think is going to happen. And if I'm wrong, I'm wrong. Hey, that's fine. It doesn't change. I'm honest about my strategies. It doesn't change my strategies. And I still think we're in a volatility phase, so which means we're going to price up over the next few weeks. But I will. Cheers, man. I appreciate that. Thank you very much. I try to do my best. Really, my passion in life is to be a teacher. So what people need, I will learn that, and then I will try to make it more understandable. So if that works, then well, cheers. Richard is great too. Richard is great too. He's been focused on this for even long. I mean, a lot longer than I have. Right, several years more than I have. He's been working on this. So yeah. Cheers, J Card. Thank you very much. Thank you very much, Blitzcray. I do. I do think that's how I see things. That's how I still see things. Yeah, ahead of the 17th, I still think maybe we get a little bit of a light pullback. We will see. Maybe I'm wrong, right? Maybe I'm wrong, but I'm just playing it on the cautious side based on what our last volatility phase looked like, right? Where it was like, oh, are we going? Are we going? Are we going? And then a little bit, and then come back a little bit, right? Just to I'll keep these options positions out of the money just for this week, and then we shoot past, and then we come back, right? Happened a lot. Oh, cheers, Dan D. Nice, nice, dude. Yes, amazing. Congratulations. Salve, signore Guido. Cheers, Jesse. Thank you, my friend. Cheers, man. Yeah, just trying to keep us all trying to be eyes on what's going on. The more of us that put eyes on it, keep each other informed, the easier it is. The better informed we all be, the better we can react, the better we can formulate strategies and decisions with respect to our investment. So, cheers. I appreciate that, man. It could. It could. Maybe not. Maybe not as hard as what we had a little while back, but I'm wary. But I mean, now a pullback, a pullback at this point might look like a pullback to 25. In fact, we can try to get a little bit of an idea because a lot of our calls are gone today. So if we do this, right, this isn't going to be perfect. This is like really big now. Why is this so big now? I don't get this. So if we get a pullback, probably to 25. Probably to 25. Kind of a little bit above there, like move into this groove. I don't know if we get some T+1 into here and then kind of depends where we open to. If we pull back a little bit and then we start moving back up this way. I can see that, but it definitely looks like we're gonna move into this 25 to 30 bracket and then chill in here for a bit. This is how we're set up for next week. Right in here. We'll see. We will see. What? I do not know. Oh, excuse me. I do not know. He might. I've never seen him do that, but I mean, he might. Maybe, yeah, like early May. I mean, right? If we kind of mirror last year, then we're probably getting something around like those Chewy swaps May 5th, and then probably I don't know. Do we double top and then go back like kind of end of May, early June, but we're coming back down again? Oh, that's right. Josh has been looking at XRT and HYG swaps, right? It's an XRT. What is it? XRT is a XRT short swapped with HYG. Is that what it is? Buona Pasqua. Yeah, don't chase. Don't chase. If you miss it, right? If it's going, like I hate chasing with long calls. I hate chasing with long calls. It makes me feel terrible. But like if you see it, you're like, it's going up and IV's going up. Don't feel like you can't sell a cash secured put. Because worst case, you just get assigned shares. But you buy that long call and it goes up and you forget to exit and it moves back out of the money like on the other side of it. And you're like, no, right? You end up super leveraged. You bought this crazy high IV thing. It moves against you and you kick yourself and you go, I knew I shouldn't have chased. And it's terrible. But with the cash secured put, you're like, all right, I missed this. But all right, up it goes, up it goes. Up, 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 up. Fine, we're moving way off my strike. I can exit these on the way up. So as it's going up, I'm making it. Oh, it starts to move down. Okay, do I want to hold? But now IV is going down as it's coming down. Now a bunch of time has gone past. So now that it's down at the same price as when I bought it, the IV is lower and there's less time value. So I'm actually up. Does it go back up? Right. So it just so much better. Things conspiring in your favor versus working against you. It just. Does it give you the same returns? No, it doesn't give you the same returns. But like, just I like winning more than like winning a lot. I like winning consistently versus winning a lot. It's nice to win a lot, but I like because the thing is like winning consistent. If you win consistently, this is the thing. This is where it tricks you. Like if you have to choose an either or, I choose winning consistently over winning a lot because number one, winning consistently eventually adds up to a lot. But number two, you create opportunities for yourself to win a lot, right? Like it's sort of like making content, right? You make content, you make Instagram things or TikTok or Twitter or YouTube, whatever it is. Like you just make stuff consistently, and over time you get this slow growth thing. But then you'll sort of cross a threshold sometimes where like one thing you make unexpectedly catches a lot of attention. Just, and but why? You created an opportunity for it to do that. So create more opportunities for yourself rather than like hyper fixating on one low probability opportunity that if it works, it'll give you a massive amount of returns. But that's what I like anyway. That's how, just create more opportunities for that. So I don't know when he would need to file because it's not a security. Bitcoin's not a security. So don't know. Well, let's look at this one. Thoughts on call writers accumulating shares during the note arbitrage and raking in cover call premium up to the $25 strike. As in, like, did people do that? Yeah, I did that. I did that. I can say one person did it. But it would make sense if you have a swap for one of the basket. If you swap for one of the baskets, then it would be good for the rest of the basket to run, so that shorting it would make you more money. Or am I stupid? I don't know. You're probably not stupid. I just don't know. I don't. I've never watched that show. Is that the one where they're just like, all right, you get to, and then they're just like, they just like yell at each other in different ways? Like the two wives are like, my husband is the worst. And then they're like, well, why do you see this husband? Or like the husband's like, my wife always yells at me. And then I don't know. I don't know. Yeah, I don't think they need to, man. I don't think GME needs to announce its Bitcoin purchases. That's why I think some of it's priced in, or like we might be trading a little bit in sympathy with Bitcoin because they don't actually know, right? So they might be pricing in like a little bit of that, like just in case, because it's an uncertainty. The company's not legally required; they don't have to file with the SEC for that. They'll announce it when it's convenient for them, but they don't have to. They don't have to say. Like, I guess they have to disclose it. They might have a legal obligation to expose a specific investment to the stockholders, but the shareholders. But I don't think they have to. Um, there's no SEC filing for it. So there is an outdated about the swap data, right? There is an outdated table that you can find shared on. It's dated to, I think, like last fall. That Reddit user Matsy made available. So it's his customized version of an outdated one of an older table by Metro Ballin. Um, Matsy hasn't updated it since I think like September, so it's outdated. The image that I shared is an image that Metro Ballin shared publicly with me on one of my tweets. So that's what I have there. I can, if you go on my page, I did a post with it. So if you scroll down, let's see, when's the date? If you go back, it's on April 2nd, right? So I did it on April 2nd. So you can go find that there. But as far as the rest of Metro Ballins, he said he would share it with me actually, but he last weekend. But he's at a bachelor party now, so maybe he will share more with me. We will see. We will see. I think I asked, always sad but truthful too, but he's very deep into the swap stuff. He's not quite interested in the same thing. Love talking, always have it truthful, but he's interested in different stuff. If that happened, if we hit $100 and then they sold 100 million shares at that price and raised 10 billion, that would send us. I don't know if it would send us soaring after a dip. We just wouldn't dip below. If they did an at the market offering and then we got $10 billion and we had a 20 billion. We had 20 billion. What would this be? It'd be 10 billion on top of it. We had 16 billion in cash, which means, yeah, we'd have like a market cap of like, no, we'd have a cash floor of like 32, something like that. No, it'd have to be by our market cap. Hold on. So if we sold 100 million shares, that roughly put us at 600 million. So we'd have 16.25 billion. What? And then divide that by 600 million shares times 2. Yeah, I mean, if we maintain the same book value at that, we would have a new floor at like 54. That's what it would be if we did that. That's pretty high. Spike, thank you so much, man. You know, it really means a lot, like for you guys to express your appreciation like this. Like, I put in a lot of work here. I spent a lot of hours on this, and it sincerely comes from a place of just, I mean, yes, I want to understand this better myself. But I don't think it would be as important to me if I also didn't have the opportunity to try to help other people along the way. So yeah, it means a lot to hear appreciation from you guys. So thank you, Deswag. Do we have a gamma ramp? We don't necessarily have a ramp so much as we have a bracket. I will show you. So this is when I talk about these like macro brackets, this is typically what I'm talking about. So let me go. What's being shared now? Is this being shared? Yeah. Let me do this. Let me make this bigger. Right. So like we had a little ramp here. Like, so this is a ramp, right? Let me get that box out of the way, right? Just move this way. Yeah. Okay. So like here, right? So as the call gamma, I wish that would go away. So now I can't point. It gets in the way. If I zoom out, is that better? Yeah. Okay. So no. So you can see how like the levels here, kind of like the red part goes up a little bit, but this wouldn't be a ramp up here because it ramps down, right? It ramps down, and then we have an overhead there. So we end up with this kind of bracket, right? Where we have, as long as we end up above here, $25 becomes a support because of all of the calls here and all of the hedging here. Okay. So then as we move up, right, we can move up and then we can claim these kind of levels as supports. But then we kind of run out of momentum. And then overhead, we have, gamma hedging for this position maxes as we approach it. So it runs out as we approach this. This becomes a really like sticky level. We don't have like any upward momentum from this. So in order for there to be a real gamma ramp, like what needs to happen is there needs to be a rate of buying at strikes above our layers here. So what you want is you want it to kind of increase as we move up. You want each layer higher to be slightly larger up to a certain point, right? So you would want this to be highest, and then you'd want this second highest, and this third, and this fourth, and this fifth. So we kind of, I guess, gamma ramped a little bit into this area, but this is when I meant like, something of an ETF event like took us over this because it wasn't options hedging in this area. And then what you want, as you're going up here, right, what happens is if you have a call gamma dominant position above you that's larger than the one below it, the gamma hedging for the larger strike above you will have a larger amount of buying versus the one that starts to peter out as it goes in the money. So a gamma ramp is going to have successively larger net trader positive gamma positions stacked on top of each other. Where as you approach the next level, as one strike goes in the money, the other strike begins to overpower the resistant effect of the one below it as it moves into the money. So you get kind of sucked up, and then a gamma squeeze is then when the buying activity at the same time inserts even more calls to continue to ramp up. So not quite. We don't quite have that. We have a kind of bracket where we'll kind of move up. We'll have an event where we'll move up, run out of momentum, and then kind of get slid back down as then charm kind of pushes us, like out of the money charm from all this stuff kind of pushes us back down. If we have an external buying event, like I think we saw today, I think that was ETF buying, probably from all of the creation events we saw earlier this week and today even. And so, right, if we get some more of that, then yeah, I think we're going to continue to go higher there. But we don't exactly have a ramp. Cheers, my friend. Glad you could profit, Shinsasu. Oh, is this me? I can't tell if this is me. Oh, hello. Great. Welcome, man. Great to have you. I don't read Hebrew letters, but I wish I could pronounce your name because then I would welcome you by name. Long, $30 long call. Don't like that bet. Don't like that. That's not in your favor. Could it go in the money? There's a chance at some point, but that's not a bet in your favor. Definitely not. $30 is like water to somebody with rabies. The $30 strike on GameStop to the GameStop options market maker is like water to somebody with rabies. Like they're deathly afraid of that. They do not like that to go in the money. So could we have a spike where IV moves up, where we kind of move to 27 or something, and your call is profitable? If you see something like that, yeah, but I would, yeah, I don't do out of the money stuff. It's hard. It's hard to make that work. Like you got to know a big bump is going to happen. And I know the 30s are really appealing because they've got a lot of liquidity and they tend to be right. The bid ask spread is really tight. The price moves a lot, things like that. But like, it's tough. Um, we might move up this bracket, but if it expires on Thursday, now this is the other thing. You got 4 days till those expire next week. They're going to take a hit maybe in the first 20 minutes, unless we explode off the open on Monday, which we might. If we get a big up move on Monday, I would, regardless maybe of where you're, whether you're profitable or not, you might consider, you know, lessening that position. I mean, it depends how much of your portfolio is. If I'm buying like an out of the money thing like that, and I'm like, it's a flyer, it's going to be a tiny, tiny portion, like 0.01% of, or zero point 0.1 or maybe less of my portfolio. And, I'll probably just like, I try to trade the strike price with where I think the week will end up because I try not to have stuff end up worth zero. That's tough. Like in the money stuff. In the money's better. In the money's better. Usually. I like to go deeper. If we're trading above 30, maybe I'll do some stuff around 25. If we're trading around 25, I like the 20s. I really like the 20s in general because like that's slightly below our cash floor. So I know now it's well below our cash floor um, book value valuation. So tough. Cheers, man. Yeah. Gameshire stop away. Coming around the bend. See you all in Grapevine, Texas. Oh, did I do that? Sorry. My bad, dog. I can see me now, though, but maybe I messed that up before. Hopefully it works now. Thank you, man. I really appreciate that, Guido. I also appreciate a little Machiavelli, a little authentic Machiavelli quote. A little authentic Machiavelli quote. Um, a lot of people, Machiavelli is one of those like highly misquoted Renaissance philosophers, right? The it's People like to say Machiavelli says it's better to be feared than loved, which is not what he says. He says it's safer to be feared than loved. Safer for a prince considering preserving his power. Safer to be feared than loved, but not better. Yeah, I don't think they've announced it because I don't think they're necessarily. They don't have to do it right away. Number one, they don't have to buy Bitcoin right away, and Ryan Cohen might be waiting for an amazing signal to go ahead and buy. And number two, it only advantages Wall Street, right? That announcement might be something that really pumps the stock. So why not wait until you want to unleash it at an opportune time? If you don't have to disclose it until shareholder meeting, then why disclose it beforehand if you don't have to? It's not a security with the SEC. Nobody, dog. I do nothing in these browns. That's just the way they look. Bitcoin, a billionaire like Ryan Cohen could buy into the BTC momentum and buy 500 million worth of BTC on a Friday, thus pushing GME high, and then sell BTC on a Monday and do it other weekends. He could. Oh yeah, he's got all his money in Schwab now, right? So Ryan Cohen can with any of his stuff that isn't GME, he can just he can bounce that around. He doesn't have to. Only with his GME shares does he have to be like really on the ball because he's an insider. Got to wait for the pullback. Yeah, this could happen, right? If 10 billionaires get together on the phone and decide to team buy Bitcoin on a Friday for 5 billion. Is that legal? I think so. I think so. Um, I think as long as they're not like exhorting people to it, as long as they're not publicizing it, I think you can collude on Bitcoin because it's not a security. It's not a security. Tom makes a great point here. You also get more experience from lots of small wins versus a few big ones. True dat. There you go. This is a good question. Will GameStop be allowed to enter S&P on its cash and equivalents and FCF from treasuries, or will they have to prove net income from operations? I forget what the checklist is. We can check that out, though. All right. Here you go. Got to have at least a 14.5 billion market cap. We're getting close. Have to have at least 50% of your float available for trading. So that was in part motivation for the stock split and the offerings last year to make it more liquid. You have to have positive earnings in the most recent quarter and a positive sum of earnings over the trailing 4 quarters, which GameStop actually does. You must be listed in the US. You have to be based on the US. And I think another one is you have to have a majority of your business. I think it's greater than 50% of your business has to be in the US, which I think that's another motivation for why Ryan Cohen closed the Canada stuff. I mean, part of it's the Trump stuff too. Part of it's the tariffs. Part of it's doing business in the US. But part of it is, getting rid of the unprofitable Canadian stores because tax stuff is terrible. Same stuff with France, I guess. Getting rid of that, getting rid of Italy, getting rid of Germany. It's not as profitable of a consumer market, and taxes are worse. Severance stuff is worse. That type of stuff is what makes it way harder to run the business, to be profitable. So, so that this helps shift even a greater portion of the business to the US for S&P 500 inclusion. Oh, that's really small. Gosh, I have to keep like switching back and forth between making this like big and small. Cheers, Maxie. It was great hearing from you, man. Thanks for tuning in. So on this one, Nobles, somebody received 220K. So the 28.5 call was sold at the bid. So somebody collected 220K in premium, probably from the market maker. Which is interesting to consider. It still might be. It still might be explosive with Switch 2, because Trump might supposedly the Japanese already sent a delegation to Mar-a-Lago earlier this week, so they might just be like, the Japanese are great. They're great people. They're terrorists. We don't have to worry about them. They're great people. Japan, they're our friends. No tariffs. That could just happen. So, Trump has made sure that whatever he does, it ends up both predictable in some ways and unpredictable in others. And they have they have weird tariffs on some stuff. They have weird tariffs on auto stuff. They have weird tariffs on agriculture. They have for a while. They've had a 700% tariff on American rice. They're like, no, you will not buy American rice. No, 700%. PFE. Don't know PFE. Dan, under Biden, it's just liquidity. Liquidity. Just say the word liquidity. Liquidity. That's it. I mean, right? Why is it going up? Wait, inflation is going up, but now stuff's going down. But why? But what? But wait, but single stock ETFs, triple leverage, just going nuts? What's happening? Liquidity. So, at least with this, it's like tariffs. You understand that, right? Deleverage now. Definitely easier to understand. In a way, I think we're also I didn't know anything that was happening in 2020 or 2020. I don't know what was going on. 2022, I don't know what was going on. Well, it depends what you mean by capitalistic. Capitalism is one of those like loaded modern terms that gets used for things other than I think it gets, are not used for, it gets mixed up with a lot of things, right? There's a lot of conflation of it with some other things. So part of that stems from, I think I've talked about this before, but some of this stems from Marxist critique. So one of the core tenets of 19th century Marxist and even pre-Marxist critique, like Proudhon and Fourier, like the earlier socialists, the pre-Marxist socialists, was like they term. I think it was Fourier termed came up with capitalism as a term, but it's like it's important to distinguish. I would say um, free market economics from a from a social ethic where money is the supreme good. So capitalism as understood in the context of a social ethic, yeah, it does, like, in the biblical sense, right? The love, you can identify it as what, would be in the Bible is called like the love of money. If you put money before as the top thing in your life and you sort of worship money as a god, right? Plutocracy, this used to be called plutocracy, right? You worship Pluto, right? The god of savings, something like that, right? The god of compound interest. So you just worship that. That's your god that runs your life. You think that as long as everything is pursued for the sake of money, it'll just all work out, right? Right. That obviously, right. You can. There's a lot of critique to be said about that, right? And if you think like Christ's objections, right? Christ's objections in the Bible to what had happened to Jerusalem in the days of the Roman Empire was that the temple of the Lord, right, the second temple, the rebuilt temple of Solomon, had been perverted into a foreign currency exchange. So, right, this is what is happening. Money changing, things like that, right? So, like, at this point in time, like the Jewish people had become very skilled in, and spread across, right, because of the Babylonian captivity and such, spread across all Persia, learned a lot of languages, could conduct very advanced long distance trade. And so back in the Jerusalem of the Roman Empire, when Jews would come back to worship during Passover, right, they had to make sacrifices, and they had to purchase this using local money. So they had to have Roman money in order to purchase the sacrifices. In order to do that, they had to exchange money from the distant corners of the earth in order to be able to make sacrifices, in order to enter the temple and worship during the Passover, make the proper sacrifices during the Passover. And there were a number of foreign currency, right? So these were Forex guys, essentially. These like physical Forex traders who were basically exploiting traveling Jews who were coming back to Jerusalem to celebrate Passover. And Christ got super ticked off at that, and he was like, "You den of vipers!" Right? And yeah, so what had happened, right? They had perverted the worship of God. They had perverted the worship of being, of truth, of love, right? They had perverted these values which are deeper to humanity, and they had put those things in the service of skimming percentages off a foreign currency exchange. And they had set that up in the temple of the Lord, right? So capitalism in that sense, as a social ethic that supersedes other things, is justifiably critiqued. One of the elements, right, of Marxist critique, though, of capitalism, it says that actually there's no such thing, right? This is Marxist thinking. Right? There's no such thing as a truly and ultimately free market. Inevitably, all markets intend toward decay and toward exploitive relationships. You can never have, in the context of a market, a perfectly fair exchange. It's always going to be that one person gains, one person loses, and therefore you have this zero-sum thing where people who know take away from people who don't, where workers are exploited for their labor and for their creative energies, et cetera, right? So all free markets, because they can never be perfectly free, are therefore oppressive and enslave people. So therefore, anyone who says that they want to establish a free market system inevitably is doing so with capitalism as a social ethic as excuse me, as the basis of their motivation. So really, they want to be oppressors, and so they build empires in order to set this up, et cetera, et cetera, et cetera. And that's not necessarily true, right? Okay, yeah, but everything, right? Any system you set up is you're never going to have perfect equality in anything. Some people may have an advantage, right? A disproportionate advantage over others. Many social systems will not be perfect. You will never set up a perfect social system. But the thing I suppose about a free market economy, right, is it's self-regulating. It's incredibly efficient. It's better than the alternatives, right? It's better than a feudal system. It's better than you were born into this class, right? You were born to be a peasant, and there is nothing you can do about it. You are bound by law to remain on the land, and you must give your labor for no return, regardless of whether you want to or not. You must serve the Lord of this land, and you must give him 1/4 of your productive days per year, and you are compensated by being able to be there, to exist. So that, without launching into a full discussion of the merits of a free market system versus, I don't know, a mercantilist system or an earlier protectionist system or something like that, right? It's important to distinguish between those things, but but what is interesting is, I suppose, the transition toward something, I guess, that's more predicated toward actually aligning the government's interests with the nation's interests versus an international, aristocracy's interest or something like that. Which, yeah, that definitely does make more sense. It's definitely a lot easier to track. I'll say that. Yeah. So more, so I would say, closer to a free market, laissez-faire capitalism, definitely, versus centrally planned economy or quote unquote state capitalism, interventionary stuff. Yeah, for sure. Yeah. Getting away from a planned economy, or using the government as a tool to extract money, because that's a lot of what's happened over the past century, right? Has been increasingly growing government, increasingly extracting value from the economy itself, right? So the government kind of sitting on top of the economy and then extracting it, redistributing some of it domestically, but then mostly redistributing it outside of the country. Which is we're figuring out with the USAID stuff, right? A ton of stuff has just been redistributed elsewhere, like the United States. Right? And see, this is the problem, right? Like the United States is actually an empire. Secretly, right? Secretly, since World War II, the US has become a very weird kind of empire. And a unique kind of empire, but an empire nonetheless. And since the fall of the Soviet Union, it's become, right, see, this is true of both Republicans and Democrats, right? Since the early 90s, mid to early 90s, after the Soviet Union fell, it's pretty much all of our administrations, with the exception of even kind of half of Trump's administration in the first time around. But basically the past, 35 years, it's been mostly self-interested parties trying to maintain that status quo by preserving. You can see the US doing this over the past few years, trying to maintain a certain set of relationships, carry them over in certain forms, or re-mythologize them after the collapse of the Soviet Union, in order to preserve this system, because this system was only in place. Read Peter Zeihan stuff. It's very straightforward. At least on this, he doesn't write academic books, but he does sort of lay out this game architecture very well. Post World War II, the U.S. current global system was set up in order to incentivize countries to develop, to stay close to the U.S., to develop, a network of alliances in order to protect against the Soviet Union, to prevent a world war scenario, but also to then outcompete the Soviet Union economically. And various administrations within that period sort of waffled back and forth between having a more interventionist and a less interventionist approach. So, like Eisenhower was more of like a covert interventionist approach. Kennedy kind of got handed that and then didn't like it and then wanted to pivot and then he mysteriously died. And then Johnson ended up being like a super heavy interventionist, and then Nixon wanted to pull us out and back from that. Um, Reagan, I guess, went back to like Eisenhower style, like kind of covert interventionist stuff. H.W. Bush was also interventionist. Clinton was highly interventionist. Bush 2 was super interventionist. Obama, a little bit more a little bit more COVID, a little bit more covert. Um, but I think Trump is like one of the few, certainly the least interventionist approach to foreign politics or foreign policy that I've seen like in the past 35 years. So very interesting. I do not own any crypto. I only trade GME, and that has to do with just my kind of knowledge approach. You know, one wife, one life, one God, one stock. That's my approach. So yeah, it's just I tried to like trade lots of stuff and do that for like 2 3 years, and I had really mixed success doing that while then also trying to have a job and also trying to do a lot of different things. Um, what I basically decided on, I thought about this, right? I mean, I read a lot of the Stoics, like read Epictetus, Marcus Aurelius on this. Obviously, I thought a lot about Christianity. I was reflecting a lot on, say, what some more recent guys have said, like Jordan Peterson, or like neuroscience from people like Jaak Panksepp, how this works. Um, how our brain is organized, how like the phenomenology of focus or something like that. And I think I mostly came to Rudder Scruton as well, actually, to a certain extent. But sort of this idea of like focus on one thing, like narrow your vision and just try to pursue it as deep as you can. I mean, I did that with my PhD, but it was like, all right, why not essentially take that type of approach to, um, to the stock market and to one thing. And that's kind of what Buffett and Munger say too, right? I mean, you know, they diversify a bit, but their thing is like, if you find a winner, diversification is nonsense. Diversification. Why would you put less money into something that you think is take money away from something that you think is a great opportunity to put it into your 12th best, something like that. If you think something is a winner, go with your winner. So I'm a novice and I don't know very much about, I've only been studying this stuff for like 4 or 5 years now, trying to understand finance and whatnot. Um, and so, yeah, my thing was just like, there's this incredible opportunity where a giant worldwide hive mind is all staring at GameStop. And it is the center of the universe, as far as I can tell, as far as what people are trying to understand in order to decode how the market is working. And we have some very, very knowledgeable activist investors who are symbolically communicating information about how it works to us, like through 4chan maybe, and Reddit and YouTube and Twitter and all this. And this is too weird and too interesting to abandon. So like, I'm just trying to figure this out as best I can. And so I will trade in depth, but I'll focus on one stock. So that's it. I am zero diversified. I'm diversified by instrument, in that I trade GME derivatives in addition to the stock. But I guess now I'm getting Pokemon cards graded, but beyond that, nope. One wife, one life, one God, one stock. That's my strategy. Yeah. Yeah, like they're like us, dude, right? They're like us. Yeah, same. Same. I think, yeah. How old is, I don't know how old is Cohen now? Is he 40 yet? I think he's like just 40 or something. Ooh, haven't put too much thought to earnings yet. Haven't put too much thought to earnings yet, but I will. I will think about that. Q1. I don't know that. Let's see. When does Q1 end? End of April, I think is end of Q1. I don't know. Q1's usually our weakest quarter. We did have a bunch of store closings. Um, when did we get the cash? We closed the convertible notes offering April 1. So we might get some interest to offset that. So we'll have to find out. We'll have to find out. All right, folks. I am off to a retreat tomorrow. I got to get up pretty soon, and yeah, go spend the day with my church group, and it'll be a good Saturday. So I will bid you adieu this evening. Exciting weeks coming up. Looking forward to seeing if some of this our theories about Chewy swap price action is going to hold up. Yeah, we'll see what next week brings. We'll see if we get that pullback earlier in the week. If we don't, well, hey, we don't, and then we go up, and it's awesome. So yeah, good luck out there, everybody. Good luck with your trades. As always, I appreciate all of you. I appreciate your questions so much. Right, your questions help me so much because they help me. They help get me thinking in new directions. Right, so um, part of this is I wouldn't nearly be able to be as effective or successful or be able to do as good a job with this without you guys. So I really appreciate everything that you guys bring to the table as well. So thank you so much. I look forward to seeing you guys with with video on Monday, and yeah, we'll see you guys then. So thanks for another great live stream, and yeah, let's go GME. So take care, guys. We'll see you on Monday.